Hey everybody, it's Doug from Legacy Investing, and welcome to my very first edition of what I'm calling Market Mondays. This is going to be some video, but mostly blog post that I'll set up for Mondays, and it's just going to be education, um, stock market news, what's going on right now, and hopefully this will help you. And to my people who already know this stuff, please excuse me if I'm talking below your level of intelligence. Just kidding. But I want to talk to a lot of the new people who are just getting started with this. So let's just start with the basics. First things first, a stock is a, um, a small piece of ownership in a company. And the more stock that you own, the more ownership you have in that company. Stocks trade on exchanges. And let me start first with the vehicles that they trade inside of. So, for example, I like to use the analogy of um, three resort condominiums. So you have these three really big resort condominiums. The first one is the Dow Jones Industrial Average, which is made up of 30 stocks. Stocks like Apple, McDonald's, IBM. Those are some of the bigger ones, and it's a diverse group of stocks. The next one is the S&P 500, which is simply 500 of the biggest companies in the country. Then the last one is the NASDAQ Composite, which is made up of mostly technology companies, and there are thousands that are that trade in the NASDAQ. Now, you have people who check in and out of these resorts called an IPO, or initial public offering. That's where a company that maybe wants to expand, they get their investment bankers together and they raise a lot of capital by going out to a bunch of investors and raising the money. So once they raise all this money, then they're ready to trade on what's called the secondary market, which is, what you're trading in, what most people trade in. All right, so the ways that they trade stocks are on the what's called the New York Stock Exchange. That's the biggest one. And then you have the NASDAQ. And I call them the streets that these major resorts sit on. So it's a way for you to trade in and out of those stocks. All right, so that's the education piece for today. Hope you find it helpful. Now, the markets, they're not having a very good time this week. So the Dow Jones just went into a correction as of Friday because it dropped over 530 points. That's a big move for one day. And that actually put it in what's called correction territory, meaning that the index has traded at least 10% below its most recent high, which was maybe about a month or two ago. All right, the S&P 500 is about 7.5% off its most recent high, so it's very, very close to that correction territory, and it may get there sometime this week. Basically, what's been happening is they're blaming this on a slowdown in the global economy. The currencies in the emerging markets have been breaking down, and there's been some turmoil in North and South Korea. So those are the big culprits right now. We're kind of getting to what are considered oversold conditions in the stock market, meaning that we could see a bounce this week, and I think that we will at some point. The critical levels to look out for on the I track the S&P 500 mostly, and most people do. The critical levels to look out for are 1920, 1920-ish on the S&P 500. If we, and right as of Friday, we were sitting at 1970. If we break below 1920, the next stop could be around 1820, 1830-ish, and that was the October 2014 low. Hopefully you learned something here, and please reach out to me. My email is doug@legacyinvesting.net. Check out my website. Follow me on Twitter at legacy_investor, and that's INVESTOR. And I post a lot of tips and good information there. So check me out, and I look forward to speaking with you soon. Take care.